Okay, so it's business time, and Laddie Williams is on standby for that one. Hello, Laddie.
Thank you, Chamberlain. Well, it's another trading week right here in Lagos, Nigeria, and definitely we're going to be getting the top stories that set your agenda. Good morning, good evening, wherever in the world you might be watching from. Let's start with the oil markets. Now, we see amidst the ongoing geopolitical tensions in Europe and the Middle East, OPEC Plus nations led by Saudi Arabia and Russia have opted to extend their recent voluntary oil production cuts for another 3 months. According to reports, the Saudi Kingdom will prolong its voluntary reduction of 1 million barrels per day for the next 3 months, a measure that has been in effect since July 2023. This extension comes on top of 500,000 barrels daily production cuts agreed upon in April 2023. Each member of the OPEC Plus alliance has independently announced its reduction plans. The Russian deputy prime minister disclosed that Russia's coordination with certain OPEC Plus nations intends to decrease its oil production and exports by an additional 471,000 barrels per day for the second quarters of 2024. All right, let's see the impact of that now. We'll see the impact on prices. We see Brent crude futures climbed there about 14 cents, $83.69 a barrel, up 0.2%. We're seeing bullish sentiment with cuts. You know what cuts does to oil prices at this time? WTI crude, the cheaper grade, $79.99 a barrel this morning, also up 0.2%. So we see this market as following each other now, talking about these two grades of oil. And definitely we'll see the impact this week going forward. Let's check the grains market now. Chicago soybean futures extended gains. That was today, after last week's 3-year lows, but plentiful supply from South America and weak U.S. exports. That limited the gains that we see. Wheat goes up 0.6%, $5.61 for a quarter of a bushel. Soybeans is also up 0.6%, following wheat there at $11.58 a bushel, while corn, that's up 0.7% at $4.27 for half a bushel. So we're seeing volatility also in the grains market this time, with wheat WV1 following leading gains right there in the grains market. And we know it's the same issues, some of the same narrative, we're seeing play out in the oil market. That's also playing out in the grains market. Shipments, a big issue at this time. All right, let's go to other stories now. Over the weekend, telecom operators took action. They're deactivating no fewer than 40 million telephone lines. This drastic measure was prompted by the Nigerian Communications Commission's mandate. We require telecom consumers to link their subscriber identity models, SIMs, with their national identity numbers by the deadline of 28th of February 2024. This staggering figure marks a significant escalation from the initial plan, which aimed to deactivate about 12 million telephone lines in accordance with the NCC directive. The NCC had issued a notice December 2023, setting the deadline for telcos to bar SIM cards that were not linked to their owners' NINs by the end of February 2024. In a firm stance, the Director of Public Affairs of the NCC has reiterated that there will be no extension of a deadline. Telcos failing to comply with the directive risk facing severe sanctions. So I think I need to go and check my lines at this point. I know I've linked before, but I hope the link still stands at this time. Let's get some company news now. We see Landmark Corporate Realty has unveiled its latest luxury homes, the Queen's Garden Annex, located in the heart of Isheri North, Lagos State. The opening of houses at the Queen's Garden Annex marks yet another milestone for the real estate company. The company says it is a testament of its unwavering dedication to providing quality housing solutions that exceed expectations of its clients. Take a listen.
In a celebration of innovation, Landmark Corporate Realty Limited unveils the Queen's Garden Annex, setting a new standard of luxury in Nigeria's real estate. It's a momentous occasion filled with pride and anticipation as the Queen's Garden Annex is officially opened. Nestled in the heart of Isheri North, Lagos State, this enclave of elegance offers more than just homes. It provides an oasis of tranquility and sophistication with top-notch recreational facilities.
It's about over 210 units. In fact, we completed that in 18 months. And the purpose why we did this is because of the challenge a lot of people face with accommodation currently in our environment today. And so we decided to come up with beautiful, affordable units that is mixed with luxury and is mixed with recreational comfort that people can enjoy and have their family happy to come home to something that they can call a home.
Landmark Corporate Realty Limited says it is dedicated to providing quality housing solutions.
In terms of quality, everything we are putting here represents nothing but quality, and we passed.
One of the hallmarks of Landmark Corporate Realty Limited is its impressive portfolio of estates in strategic locations across Nigeria.
We have the Avocado Apartments in Abijo. We have the Paragon in Abramade Soya. We have the Lagoon Front. We also have the Lake View in Ekpe, right? We have in Kashi, we have in Kuje, in Abuja. And the amazing thing about Landmark is that we have a flexible payment plan for everybody from 1 to 24 months. Yeah, so yeah, you can key in. We have a lot of projects coming on, and you just have to stay tuned and keep your fingers crossed.
And the keys to some of the luxury homes are handed to proud homeowners.
I'm very happy. Thank you very much. I'm very happy. And I can't wait to move my family down, from UK to come and spend time in a good, quality home.
With focus on innovation, quality, and customer satisfaction, the company says it is poised to continue shaping the future of real estate in Nigeria for years to come.
And the battle to rein inflation and stabilize the FX market has led to a jumbo rate hike and jump in the cash reserve ratio for banks. But how can the real sector be protected in times of rate hikes? Is it even possible to do that, at this point? Joining me now is Professor Segun Ajibola, Professor of Economics at Babcock University and the past president, Chartered Institute of Bankers of Nigeria. Great to have you on the show, Professor.
Thank you very much. Good morning.
Yeah, good morning. It's the start of a fresh new week, and definitely right now, everyone wants to know the way forward. And we've seen the rate hikes at this time. It's been a long time coming. And this one, the last MPC meeting was the biggest one we've seen, so far, 400 basis points. So at the end of the day, it begs the question, is it possible to tame inflation, with Nigeria's case, without the risk of tanking the economy?
It's possible to tame inflation, but the right course must be taken.
Right.
There are 3 things that must follow themselves in quick succession. Our economy, as of today, what's the problem? Have we properly diagnosed the problem? So there's the issue of diagnosis. Then, are we prescribed appropriate policies, strategies, initiatives to change the course of the economy as of today? We should put this in perspectives. Then we now ask ourselves, what is the way forward? If we look at what is happening as of today, we look at inflation, we look at the overall economy. I am not too sure if we are following the right track in taming this monster called inflation. If we look at the monetary authorities, let's single out the 2 most significant variables that have been attacked in recent past. First is the question of cash reserve ratio. Second is the question of monetary policy rate. Let's look at the cash reserve ratio. We must admit that the central bank is carrying out its statutory function of being bankers' bank. So, as you and me patronize our banks, commercial banks also patronize central bank. That's one. Two, we must also appreciate the fact that the monetary authority struggles to look at the quantum of money in circulation, that is money supply. Is money supply excessive? If it's excessive, elementary definition.
And over 70 trillion, at the last
about
count.
78, between 78 and 80 trillion as of today. But the cash component of it is just a little over 3 trillion. So if it's too much in circulation, then the elementary definition of inflation, too much money in the economy, in the system, chasing fewer goods, will apply. I'm coming back to that. So when we now look at the cash reserve ratio, I'm taking that first, moving from just 32.5% to 45%.
That's the highest we've ever seen.
Yeah, the highest we've ever seen. The immediate implication is this. With every 100 naira deposit coming to a bank, 45 naira goes to central bank as reserve. And that means central bank is still playing its statutory role of being lender of last resort. In case there is any problem, liquidity problem, a bank is facing, you run back to that reserve to solve that temporary problem. But the first implication is that you are left with 55 naira out of every 100 naira. You must apply that 55 naira first to cover the cost of mobilizing 100 naira. So, which means at any point in time, you look back, how much has it cost you to mobilize 100 naira?
And as a business, definitely I might need a loan to run some of my day-to-day expenses. So if I go to the bank, there's a huge chance that I might not get any credit.
So if you now have to cover all your expenses with 55 naira out of every 100 naira to conduct business, you can imagine the implication of that on the lending rate.
So we're seeing lending rates really high at this time, but at the end of the day, the banks will not even have enough to lend out at this time.
Exactly. So you see the rate jumping up because of the implication of applying 55 naira to generate enough business to pay for 100 naira. So that's the first implication. Now, it's the same thing for the monetary policy rate, moving by 400 basis points from 18.75 to 22.75. So the implication of both is that rates in the system will go up. Treasury bill rate has given the lead.
Which is good for the fixed income traders at this point.
Which is 19% per annum. Now, when you look at TB rate, perhaps the safest form of investment in our environment as of today, going for 19%, then you ask yourself, you and me, whatever we have that is excess liquidity in our hand, and we go back to our bank now, how much do we want to collect in terms of a deposit rate? Definitely it will be much, much higher than what it used to be. The monetary policy rate, which is often referred to as reference rate, used to be totally disconnected from other rates at the time, 2 years back, when the monetary policy rate was about 17% thereabout. Treasury rate was running at 6-7%. So the deposit rate 5% and so on and so forth. But I think what the monetary authorities try to do now is to move those rates closer. By so doing, if treasury rate is going for 19-20%, imagine what deposit rates will go for.
All right, Prof. But
at the end of the day, lending rate will definitely jump, maybe to about 30-something%.
Right.
Then we start asking ourselves the question, how may need all this, a combination of this, to work in my farm, to bring out yam to the market? So somebody will say, yam is not imported. What of the inputs, to produce yam?
Right.
Ditto for all other products.
Right.
Then even those ones that we import, exchange rate has translated into higher cost, landing cost, per unit cost. So at the end of the day, going to the market, you see increases in all these commodities.
And you need,
what can we do
to
battle that side?
Right.
Rather than mopping up.
So, Prof, so much to unpack there, but it's just that we've run out of time, at this time. But we'll definitely, continue the conversation. Thank you so much. We're hoping for some kind of soft landing at some point, even though we know everyone's expecting a hard landing with what's going on. Professor Segun Majibola, Professor of Economics at Babcock University and past President, Chartered Institute of Bankers of Nigeria. It was great having you today, sir. Thank you so much.
Thank you very much.
Thank you so much, Prof.
Thank you.
So that was the conversation right there. But it's another trading week, definitely. And yeah, it's a first listing of 2024 on the NGX, talking about Transcore Power. It's set to list its 7.5 billion ordinary shares of 50 kobo by introduction on the Nigerian exchange. Let's get a sense of what to expect. Now, joining us for this conversation is Agie Akpata, Chairman, Skymark Partners. Great to have you on the show.
Good morning. Thank you for having me on the show.
Good morning. So we see Transcore Power PLC is being listed at a market capitalization of about 1.8 trillion naira. What's the significance of this in the Nigerian market, and why is it the more valued, than the parent company?
Well, I think the significance of the market is, every new listing is very positive, particularly very large listings like this. And so it definitely is a positive development in terms of the depth of the market. In terms of the question you were asking about how the sub can be worth more than the parent, it's a classic problem of conglomerates, where conglomerates have a bit of a discount when you combine the value of the businesses in them. And that's probably one of the reasons why it's been listed, because this business has been inside the company for a while, but not properly valued. So now you can see the value of the company. Of course, bear in mind that the subsidiary is not 100% subsidiary, it's 51%. So in reality, the parent company's ownership in there is 51% of 1.8 trillion, which is about 900 billion, at least at the beginning of trading today.
And, definitely, we're talking about moving from a consumer nation to a producer nation, and definitely you need power, to make that happen. So how do you see the power sector evolving, with this listing of a second power generation company in the Nigerian market?
Well, I think it's a big positive. The first listing was about 2 years ago, Equities Power. This is the second one, and it does confirm that there is the appetite in the market for these kind of companies. But more importantly, it does show that the privatization process is coming full circle, with those companies now going public. We probably would expect more generation companies to list in the future. It might take a while for the distribution companies to get listed, because they have a lot more problems with collections, and their ownership structure is not as clean as the generation companies. For generation companies, their primary customer is Nigerian bulk electricity trader, which is federal government owned. So they don't really have counterparty risk like the discos. But I think it's definitely a very positive development for the market. And I think given the trajectory of Equities Power, I think this is definitely going to be well received.
And definitely, at this time, Nigeria, we're all hoping at some point that we're going to have, be able to at least enjoy 24-hour power, so that the industries can actually, produce at this time. But with all these listings we're seeing, and liquidity, most of these companies coming to the market to get liquidity, is there a prospect that, at some point, we can actually enjoy more than 18 hours of power in a day? Is that a prospect?
Well, I think that's the upside these companies have. When you look at the installed capacity, for instance, Transcore Power, 972 megawatts compared to the existing listed one, which is half of that. when you look at the amount of money they are generating in revenues, it's a lot less than their capacity will suggest. So as the federal government tries to fix the bottlenecks in the power sector, these companies already have the capacity to dramatically produce a lot more. So once those bottlenecks are fixed, the production is there. It's just the last mile distribution and transmission. And as that transmission and distribution problem is fixed, the amount of power available will definitely go up from the grid. Cheapest power you can get is grid power. And the long-term goal is to have everybody get 24-hour power from the grid.
Right, definitely. That's the goal at the end of the day. Thank you so much for coming on, Mr. Ige Akpata, Chairman, Skymark Partners. Thank you so much.
Thank you.
All right, let's get a quick check on some of the markets we track here. And definitely, if we look at the NGX last week, another negative close. That's for the NGX, down about 3.27%. Another big drop. And we see the equity cap there sitting at 54.035 trillion. Let's look at the volume and value now. We see that was all in the green, still signifying that there was a strong sell pressure in the market, strong activity right there. Deals 48,464, bigger than what we had in the previous week, and value sitting at 34.14 billion. That was the total number of stocks traded for the week. Let's look at the gainers now. We see Julie PLC again topped the gainers counter for the week with a big 60.26%. We also see PZ Cossins there, 27.36%. Sterling Financial Holdings, 14.94%. That's for the week. So definitely Julie has been doing pretty well back to back for about 2 weeks now. Let's look at the losers now for the week. We see MTN Nigeria. Yeah, that was a big drop there for the market, 18.91%. That was a close for the week, and a really big drop there. Sooner Assurance Nigeria PLC, 1.71 kobo, 18.18% for the week. That was a big drop. So definitely we're expecting some kind of cherry picking this week after back-to-back losses on the NGX. Transnational Corporation PLC, United Bank for Africa PLC, those were the top trades for last week. And definitely we're getting first listing of 2024 today. Hopefully that's going to spur investor appetite, and maybe we can get a green close this week and maybe back above the 100,000 level for the all-share index. All right, so that's the show today, and that's how the markets are looking for last week, and that's the expectation for this week. And definitely it's a new month right now, March. Let's see if the bulls can take control of March. I hand things over now to the Sunrise Daily team.